Yo, good morning, good morning, good morning. Thank you guys so much for tuning in to another live stream. Today is August 28th, 2024, and we have about 2 days left till the monthly close. So with that in mind, we have to keep in mind the monthly power of 3 here. So if we were to get the TGIF of this, where are we closing here? So we would most likely close within this zone here, this 0.2 to 0.3. So would there be a reason for prices to continue lower? Well, yeah, to take out Tuesday's low of day. So there could be a reason why we could trade lower here. So I actually want to just keep that on there, just so I can remind myself of the monthly power of 3. Alright, into intraday price action, and on the hourly chart we have created this bearish fair value gap. This should be respected if we are going to continue lower. However, we're almost in some sort of consolidation right now to prepare for the next monthly handle. So we have about 2 minutes left till the equities open. So let's just watch what we do from there. But I'd rather stay on the hourly chart just so I can see what price is doing. So on this 8-hour candle right now, it closes in about 30 minutes or so, and we can tell which direction prices wants to go just based on this candle once it closes. So if we close right now on this 8-hour candle, if we close like this, just purely looking at it, I can tell that we are probably going to continue lower here. But are there confluences on the lower time frames that tell me, hey, we're going to go lower? Well, on the hourly time frame, like I said, there's this hourly CB, hourly fair value gap, that should be treated as resistance if we are going to trade lower. Yeah, let's just continue to watch prices and see what we do. We also have SMTs here with ES. So ES took out previous day high. However, on NQ we did not. So there is SMT between NQ and ES. This SMT should hold if we're bearish, so prices shouldn't trade back above this high anymore. This should become a protected high. Alright, let's see what prices does here in the first 30 minutes. I don't really trade the first 30 minutes, so let's just watch. Let's see what if we gap. So we gapped up actually, or gapped down, sorry. We gapped down, and let's see if we can fill in this gap here, this RTH gap. So we filled the gap. Let's see if we can get a closure above it. If we get a closure above it and we disrespect this hourly CB, that means we are most likely going to take out London highs. So we actually have SMTs here between NQ and ES, if you guys just want to take a look at that. See, there's a SMT. This here would be considered a market structure shift. How we had created a low, we retraced into a fair value gap, and then we took out the low again. After we take out this swing high, that would be treated as a market structure shift, and then we come back in and we continue higher. If we can create displacement through that high, of course. If we don't create displacement through the high, then there's no reason to be treating that as a market structure shift. We have to get displacement through the high. Alright, let's just continue to watch prices, and yeah. So I usually wait for candle closures already in my, according to my trade style, so there's not really, I don't really have to spend too much time looking at the charts. I do have second monitors here though, so what you guys are seeing on my stream isn't all what I'm seeing on my screen, because I have multiple monitors, and yeah, just know that if it looks like I'm not, if it appears that I'm not even looking at the charts, I am. I have different monitors, so oh. So I do want to go over some of the pros and cons from last week, and some of the improvements here from this week that I can do here for myself. Very common characteristic of the markets. During the very first 30 minutes, markets tend to be like this, where one is going higher and one is going, so one's going lower here, one's going higher. It's really weird. Okay, so let's take a look at the pros and cons here. Some of the pros that I did last week were I was able to answer the question, why do we create this power of 3, right? So let's just say, I ask myself this right now. Let's just say we close on this 15-minute candle right now, right? I can answer this question, like, why did we create this bearish power of 3? Well, we traded into a hourly fair value gap, and we had a reaction to it. And whenever I say reaction, that just means that we had, you know, some sort of bearish closure to it, or we displaced away from it with SIBIs. So that's the first pro, is being able to answer the question, why do we create this power of 3? Second one is I was able to factor in, or let's actually go back, look at some of the examples of that actually. So 819, right? So 819 and 823. For why did we create that power of 3? So on this specific trade here, we came into a 15-minute fair value gap. We're still holding this 15-minute fair value gap here, and there was a model that presented a so not all of these. So this power of 3 here, whenever we had a reaction to the 15-minute fair value gap, we didn't have a lower time frame entry model. But this one, however, whenever we traced into the fair value gap, we had an entry model here. We had displacement on the lower time frames. So notice how there is not much displacement here. But here we can see the displacement that's clear right here. So there's that 3-minute fair value gap, and we created a 15-minute bullish power of 3. So we can anticipate for that 15-minute high to be taken. So now you would go on to the 1-minute time frame and kind of set up your model here. So we enter at the 3-minute fair value gap. I'm targeting the 15-minute highs, and these highs here haven't been taken out yet, so there's no SMTs. So I'm pretty sure I noted that out. There was no SMTs between NQ and ES, so we had room to trade higher on the indices. So there was no SMTs at these swing highs here. All right, and the 823 one is Monday trade, or Friday, sorry. So NQ, based on how we close on the 15-minute candle, I can anticipate for us to take out its high. We also have time frame alignment between the 15-minute and the 30-minute. Oh wait, sorry, this is the trade here. So we created this 15-minute bullish power of 3. Why did we create this? Well, we traded into the consequent encroachment of a 15-minute fair value gap, and we're still holding that 15-minute fair value gap. So we are respecting it. On the lower time frames, is there a fair value gap that I could enter off of? Well, there's a 3-minute fair value gap, but I'm treating this 3-minute fair value gap as a breakaway gap according to my fair value gap theory. That's on my YouTube. And on the 1-minute, there is a 1-minute fair value gap here. So in confluence with the breakaway gap here, I'm treating this as a breakaway gap. However, on the 1-minute, there's a gap on the 1-minute. So I take the entry at the 1-minute. I'm targeting the 15-minute highs, and my stop loss is that 3-minute fair value gap's high. So I'll have my stop loss here. Entry is at the 1-minute fair value gap, and I'm targeting the 15-minute highs. And then move stops to break even once we take out the 15-minute highs, and then I would have taken partials at the standard deviations. So that's an A+ setup. Very good model there. Second pro is I factored in the fact that we did not have SMTs at the highs, which means we still had room to trade higher on NQ. So like I said, on the 819 trade, where we didn't have SMTs at the highs, I was still able to take that model. And the third pro was I was able to align the 15-minute and the 30-minute and the 1 hour. So this is a crucial aspect of my time frame alignment. or it's a crucial aspect of my trading strategy. And understanding time frame alignment will tell you when we are going to trade higher, when we are not. So that actually occurs on the August 22nd trade. So this one is here. So notice how there's a 1 hour and this 30-minute. Both of those time frames are telling us that we're going to continue lower, and this 30-minute fair value gap should be treated as a breakaway gap. So on the 15-minute time frame, this first initial closure on this 15-minute candle didn't suggest to me that we were going to go lower yet. So I waited until the very next 15-minute candle to close, and I wanted to see how we would have, if we would have a bearish closure or not. Well, we did end up getting that bearish closure, and on the lower time frames there was a 2-minute fair value gap that we created. So on the 1-minute time frame, whenever prices retraces back inside this 2-minute fair value gap again, I take my entry targeting the 15-minute low and the 30-minute low. And there's previous days New York PM session lows as well, and we end up taking that as well. So you can use standard deviations from the swing high to swing low, and then you can take off some partials at the standard deviations. But like I said, aligning 15-minute with the 30-minute with the hourly allows me to be very on side with what the market's currently doing. So some of the cons are not paying close attention to how prices treat the consequent encroachment of the fair value gap that I'm entering off of. So this 1-minute fair value gap, right? If we had a candle closure below this 1-minute fair value gap's consequent encroachment, then I would have taken off like half of my entries or half of my contracts, just so I can mitigate risk. If we got a full candle closure below the 1-minute fair value gap, then I would have taken off another half of my contracts, just so I can continue to mitigate risk. That's what I mean by paying close attention. So I need to pay more attention to how we close at the if we're staggering around inside the entry fair value gap. The mental con is I could have done better is I had feelings of FOMO. I stayed on the charts. Even though I had feelings of FOMO, I stayed on the charts, and I shouldn't be on the charts then, because no matter hả?
Hôm nay birthday ba có đi ăn buffet không?
Có đi coi lớp ngày hôm nay.
Mấy giờ?
Tới 9 giờ ngày hôm nay.
9 giờ tối luôn hả?
Dạ.
Mấy giờ đến mấy giờ?
6 giờ.
6 giờ đến 9.
Alright, so a mental con is I had feelings of FOMO, and I shouldn't have been continued to stay on the charts. There should be no reason for me to. Yeah, I should be off of it if my emotions aren't in control. And again, SMT, I failed to recognize SMT at the highs of my first trade on August 23rd, so I failed to recognize that, and I ended up trading with full size. Let's see what I mean by that. I believe it was here where we had SMTs between this high and this swing high, and I failed to recognize that, and I entered with full size, so I shouldn't have done that. Some of the improvements here now. So whenever I do take a trade, I need to manage that trade properly, take off some contracts if prices disrespects my entry fair value gap. So if we got a candle closure below the consequent encroachment, or a complete closure below the fair value gap relative to its time frame. So what I mean by that is, if a 3-minute fair value gap is disrespected on the 1-minute time frame, that doesn't mean that we completely disrespected it. Or if we had like a candle closure below a 3-minute fair value gap on the 3-minute time frame, then that's complete disrespect. I need to pay attention to SMT, so I'll have the SMT charts here, paying very close attention to it. Yeah, if there is SMT between session-based liquidities or previous day high or previous day low, then I do not take the trade, and I have to be more selective with the yeah, bye man. I have to be more selective with the trades I take. Trade heavier size, so being more selective just means that I need more criteria of all my aspects in trading. So I need time frame alignment. I need to understand why we created the power of 3. Displacement on the lower time frame. Facing the trade head on. So I need to have more confidence and conviction in my setup. So this just so this goes back to point 3, where I need to be more selective, and whenever I'm more selective, that means it builds my conviction and more confidence in that setup, because all of my elements of a trade model presented itself. And I just have to execute on that model whenever it does present itself, being content with the outcome, and just know that you did your best. So those are some of the pros and cons and some of the improvements that I can do for this week. And now I'm going to go over some of the A+ setups here. This chart looks extremely messy, but prices respect a 1 hour fair value gap. We displaced lower, and during this initial displacement lower here, I wasn't able to grab an entry, just simply because we displaced really fast, and there wasn't really much displacements on trading with the 15-minute model. There wasn't really much opportunities on. But yeah, so the trade I took was actually, I waited until we had that initial displacement, right? So whenever prices retraces back inside this 1 hour fair value gap, I wanted to see if prices will respect this hourly fair value gap or disrespect it. And in this case, we actually started to respect the hourly fair value gap. So we respected the hourly CB here, and notice how on the 15-minute time frame, we are disrespecting a 15-minute BISI. So on the higher time frames, we have a bearish fair value gap. We respect it, and on the lower time frames, we disrespect a bullish fair value gap. That's bearish price action. So now the trade I take is based on this model itself. I'm treating this 15-minute fair value gap that we created as a breakaway gap, so I don't want to see prices retrace back into here. And the model I take is actually based off of this 15-minute power of 3. So it is aligned. This 15-minute power of 3 is aligned with the 30-minute and the hourly. And notice how on the 4-hour, 6-hour, and 10-hour charts, we are in alignment with one another. So this 10-hour, based on this 10-hour power of 3, I can anticipate for prices to take out this 10-hour low. Same thing on this 4-hour as well. This 4-hour, it's also telling me that, hey, we're going to attack this 4-hour candle's low. So we have time frame alignment between the 15-minute, the 30-minute, the hourly, and we have a higher time frame agreement with the 10-hour and 4-hour. So now I'm taking my entry at the 3-minute fair value gap on the lower time frames within that 15-minute model. So my stop loss is that 15-minute breakaway gap's low. So I don't want to see prices retrace back into here. So on the low time frames, whenever prices retraces back inside the 3-minute fair value gap, I take my entry and I'm targeting the 15-minute, the 30-minute, and the hourly low. Here you can see it a little bit clearer, but we stab up into the 3-minute fair value gap, and then we take out the 15-minute, the 30-minute, and the hourly low, move my stops to break even, and then yeah, very quick in and out trade. And yeah, that is an A+ setup. Like, we had that, like I said, we have so many confluence here. We have the 15-minute breakaway gap. We have on the lower time frames, we have a 3-minute fair value gap, suggesting that there's displacement. We are in time frame alignment. We have time frame alignment between even on the higher time frames as well. So A plus setup and another A plus setup here. I want to go over. Let's just take a look at a random A plus setup here. Let's go with this one. So this one, same concept as the last one. So notice how prices creates this hourly fair value gap, right? This is the hourly time frame. Prices retraces back into the hourly fair value gap. I don't take my initial entry here. I just want to see if we can get some sort of reaction to it on the lower time frames. So on the 15-minute time frame, we can see clear displacement or clear respect of the hourly fair value gap. So we start creating these bearish 15-minute candles. And the model I'm actually taking the entry off of here is this 15-minute model. So whenever prices respects this hourly fair value gap, we create ourselves a 15-minute fair value gap as well. So that means we displaced away from a key level. So now on the 15-minute time frame, I'm waiting for the same thing. Will we respect this 15-minute fair value gap? Which we did. So whenever prices comes back inside this 15-minute fair value gap, I see that we had a bearish reaction to it. So I'm trading I take my entry based off of this 15-minute time frame or 15-minute candle here. And notice how this 15-minute candle is in alignment with the 30-minute time frame. So we have time frame alignment between the 15-minute and the 30-minute, both suggesting that we are going to continue lower here. And on the lower time frames, let's see if there's an entry pattern. So on the 3-minute time frame, there's actually a 3-minute fair value gap. So whenever prices retraces back inside this 3-minute fair value gap, I take my entry and I'm targeting the 15-minute and the 30-minute low. So here now on the 1-minute time frame, you can see it a little bit clearer, but I'm targeting that 15-minute low, 30-minute low. I enter on the 3-minute fair value gap, and we started to displace lower. So yeah, this is an A plus setup. Some aspects of why it is an A plus setup is, like I said, we have time frame alignment. We know why we created this bearish 15-minute power of 3. We created the bearish 15-minute power of 3 because we came into a 15-minute fair value gap. We also, the reason why we even created that 15-minute fair value gap in the first place is because we retraced into a hourly fair value gap and we shown respect to it. So that's very first reason. And we have time frame alignment. On the lower time frames, there's displacement, there's fair value gaps on the lower time frames for me to take the entry off of. And yeah, 2 A plus setups for you guys. I just broke that down, and I hope you guys were able to take some notes from that. All right, but let's go back to the live charts now. So we have shown respect to this hourly fair value gap now. So let's just do the same process here. Like I said, we came into the hourly fair value gap and we started to show disrespect to it, right? I don't trade this first 30-minute candle or 30-minute of the day, so I don't trade this first initial candle here. But however, I could trade this model. So if we can create a bearish candle, 15-minute candle here, I would consider taking a trade. But the thing is, look at what YM is doing and look at what ES is doing. We aren't as bearish as we are with as NQ, and there's also SMT here. So now if I'm going back to some things I can improve on, right? Well, if we have SMT, right, that means either I'm going to lower my size or I'm not going to take that trade model at all. So let's see if there's fair value gaps on the lower time frames that matches up with the 15-minute model. So there is a 3-minute fair value gap that's all the way up here. There's a 4-minute fair value gap, and there's a 5-minute fair value gap. Okay, simply based off of this model here, I'm not going to take it. Even if we do end up taking that 15-minute low, I'm not going to take it. But keep in mind, it is in confluence with the 4 hour, the hourly, and the 30-minute time frame. So the 15-minute is aligned with the 30, 1 hour, and the 4 hour. I'm pretty sure we are also in alignment with the 8 hour as well. So yes, so we have multiple time frame alignments here. But on the lower time frames, I can't find a clear entry model to target that 15-minute low. So said we can do something like that. But yeah, we shouldn't even retrace all that deep into it. And with the SMT2, it's just, yeah, I don't know. We still have 2 minutes, so let's just watch. Maybe something like this. Treat that 15-minute fair value gap as a breakaway gap. I mean, you can enter something like this here. If we can get a bearish candle closure, that is, though. But like I said, either I trade with less size here, or I don't take the trade at all.
Every morning, it's because I'm a marathon runner, or because I'm some kind of triathlete. It's because I fucking hate running, man. I hate getting up early even more. So I'm starting the day by building a non-negotiable standard for myself, which I've come to realize is the only way we can ever grow and improve. People say no one's coming to save you. They're not talking about how no one's coming to help you reach your goals. They're talking about how no one's coming to save you from yourself. These are not standards, man. We always lose direction, and we always fall back to our lowest automatic systems. Binging, procrastinating, clinging to comfort, and the fucking worst one of all, dude, lacking a desire to change because it's just too difficult and discomfort is so distasteful these days. So when I'm out here in the morning, it's not about mileage, it's not about pace, not really. It's about creating a rhythm and creating a standard and a certainty in a world of uncertainty. I take a great check in. I'm honest. I try to be, I'm trying to stick with you. But you guys need to get hit by your dad's open. You guys need to get like an alcoholic brain.
There's the 10 o'clock open. So yeah, like I said, you could take this trade here, treating this 15-minute fair value gap as a breakaway gap, and trade up into the fair value gap to target the 15-minute low. I'm simply not gonna take that model. But yeah, let's just watch what prices. So we end up taking out that 4-hour low, and let's see what NQ or ES and YM is doing. So YM, I don't know where YM is, because YM is trading higher while NQ is trading lower. So very interesting. And we wouldn't even have gotten an entry pattern, to be honest, either, because this 10 o'clock candle didn't wake up into a fair value gap. We just simply displaced lower there. So there wasn't really much there wasn't really an entry pattern to even target that 15-minute low. So that's good for me staying. Like I said, your rating of a trade, or like your performance that day, isn't determined by the outcome of your trade. It is determined on whether you are sticking to your trade plan, your trade model, you're sticking to your rule sets, and you have to remind yourself of that constantly. There's no better feeling than, hey, I just what's the word I'm trying to look for? You know, you abiding your rules, following your rules, sticking to what is. What? I'm blanking. I actually just blanked. Following your rules and sticking to your discipline is what should determine your performance on the markets that specific day, right? Like I said, it should not be determined by the outcome of your trades. Even though you lost a trade, that's like I said, every trade could be a losing. So even if it's an A+ setup and it ends up being a losing trade, were you able to execute on it? I mean, you know, if you were able to execute on a A+ model and it ended up failing, there's no reason for you to be criticizing yourself. No reason for you to be criticizing. You did a good thing.
She has 1.3.
So now here, I would just continue to watch prices because, like I said, we already completed our objective for the 8 hour, for the 4 hour, for the hourly time frame. So now I would just wait for another, you know, I would just wait for time to pass and create more structure. So yeah, I'm completely content with what the market gave me today. Even though we didn't get an entry pattern, we were able to, you know, stay on the sidelines and kind of see where prices were drawing towards. Asia's lows was a clear draw. We had already taken out Asia's highs and London lows. So, and if we are going to treat London highs as a high of day, then Asia's lows will be taken. my gosh, that's... Seven minutes till the 15-minute candle closures here, and if we don't get like an instant rebalance of this fair value gap or this gap here that we have created, then we should continue to we should create a 15-minute fair value gap, and let's just watch if we can respect this 15-minute fair value gap or not. If we do create it, that is. Five more minutes to the candle closure here. I'm gonna play a chess game. Just to get my head warmed up and thinking. Today is Wednesday. It's Pops' birthday today. I would love some ideas to be able to find some ideas to be able to get my dad for his birthday, but I don't know what he wants. It's not that if he wants anything, it's the thought, to be honest, that really matters. If it doesn't take, I just go up here. I have to get more control. So we're respecting bearish PD arrays right now on NQ. Just pay attention to that. I'm attacking here now. Okay. It brings here. I have X-ray vision on his. If he brings out his bishop here like this or something like that, then I have. Yeah, you can do that too. I'm gonna castle this way because he has only 3 pawns on this side. So I'm gonna castle this way instead of having to face against 4 pawns. Castle and then probably bring out my bishop and scooch this up. So I'm taking. Okay, I'll go here and then move my bishop here. So I can get control of this square here, and then now I go here because he doesn't have a pawn that can move here. So I'm gonna move here and then get control. So if he takes, I take, he takes, I take. I guess. So I'm gonna mark out this 15-minute fair value gap here. I need to mark out the 10 o'clock open, shall we? Completely forgot about that opening price. That is something that I should continue to mark out the opening. So 10. 4-hour open. So let's see how we treat this 15-minute fair value gap now. If we can get respect to the 15-minute fair value gap, or if we don't get the respect. If I go here, he takes and then I take. If I go here, he takes, I take, and then I have my open file against his pawn. Yeah, I think I go here. So if he takes, I can take with my pawn. He takes, I take with my pawn, and I have opening this up, this file up for my rook. Yeah. It's probably the best attack. Now, attacking that, and nice, blundered. I can actually take his bishop now. If he moves up his thing, then I just take here. Yeah. That's a fine trade for me if I say so myself. I'm gonna take control of this open file. I'm sure he's gonna move his rook. Either move his rook or his knight. Okay. He blundered again. Gotcha. Got this guy blundered. He's down a significant amount of points. I can continue to push my pawns here, probably shift my attack towards here. Yeah, continue to probably push up my pawns. So prices is now trading back inside this 15-minute fair value gap. So let's see what we do from here. let's just continue to push price or push my pawns to tag this queen, this king here. Open up the position a little bit because I have this open file here, so I'm sure he wants to probably do something like that. Go here, he takes, I take. This allows me to scooch my my bishop back in case he does that. Yep. Now I just continue to do my attack on this side. Probably scooch my thing here, attack this. Unless he goes here, then I can take here. Yeah. Okay. Continue to move up my pawns here, to be honest. Keep trying to shove my way through. I don't know why. Oh wait. Ah, I see. Nice. So I just actually just run. Is there another move I can make here? Not really. He has to take this now. Dang, I was up 2 points, now I'm 7 points, now I'm up 5. That's no good. I should have... What should I have done there? Move here. So I should have moved my king, queen here in this case. Instead of trying to force... All I have to do is keep my pieces on the white squares, so this bishop can't do anything. This pawn's hanging. You take here, and I take here. I don't see what he's trying to do here. The queen's not that active. I need to get it active. So let's see if we can get a bearish candle closure here on this 15-minute candle. No. not too entirely convinced that this is actually winning for him. I don't think this is winning for him at all. I think he's trying to go here, so actually I'm going. Even if, oh no, he can still. Oh, shit. I think I just go here. Oh. Yeah, we don't have much displacement onto the downside here, so just going to wait and see. If we get a disrespect of this 15-minute fair value gap, then that would be different, because that means we could go longs. But if we have no displacement on the downside, then there's no point in longing. So we have to see some displacement on the lower time frames here for me to long. And I'm winning. He's down all his pieces, and I still have my queen. So yeah, I think that's winning for me. I think I go here. Oh, I should have gone here actually. I think that was my best move actually, was to go here. Oh! Oh my gosh, he actually just... Oh my gosh, no way, he just tied it up. Okay, now I just actually have to walk this. No way, brother. No way. No way, Jose. I think I can win by time here, actually. I think I can run my time. Oh snap. I blundered so hard this game. Oh my gosh. Let's go here. I don't think he can check me. I just can't reach 10 seconds. That's my only move. Oh my gosh. Wow, that's 20 push-ups, bro. That's 20 push-ups. That's 20 push-ups. Holy. We actually have this 2-minute fair value gap here. If we can get a retracement back inside this 2-minute fair value gap, I'll take a long again. Target there, stop loss here. Oh, that wouldn't even be a 1-on-1 actually. Well, we actually already got that retracement inside it, so will we get a second retracement to target the 15-minute high? 15, 18, 17. So if we can get another retracement back inside this 2-minute fair value gap, I'll take a long targeting the 15-minute swing high here and the 30-minute swing high. Get another retracement into it, then I'll take it. But yeah, this is based off of we are disrespecting this 15-minute fair value gap by closing above its consequent encroachment, and I'm targeting the rebalance of this 30-minute fair value gap. So I want to see prices, create that open low high into the 30-minute fair value gap that we just created here. So now so this idea that I'm just now have is for us to rebalance this 30-minute fair value gap. The first initial entry I missed, but here let's see if we can get another entry here. So we just got tagged into it. So I'll move my stops to break even once we take out the swing high, this 15-minute swing high at least. And I'm watching patiently on ES2, because if ES takes out its respective high, then I'll consider moving stops to break even. Oops. But yeah, just content practicing. Okay, so ES just took out its actually swing high. So yeah, so notice how ES took out its swing high here. So I had to move stops to break even because ES took out its swing high and NQ didn't. So us moving stops to break even there is the right thing to do for me, at least. Let me see if I took any I didn't take any loss there. Okay, yeah, I didn't take a loss. Okay, that's so there we go. So like I said, I took that off because the reason why ES took out its swing high already. So if you guys take a look on ES here, we took out its 15-minute and 30-minute respective swing high. So on Q, I've had to move my stop loss there. That was the reason for that. So one break even. First trade break even. Respectable. Alright, so we were able to avoid that by paying attention to SMT. Stayed calm, took in market information that's just simply information. I want to see, look at how prices respects this consequent encroachment of this 15-minute fair value gap. So we know why we created this bearish power of 3 now. There was SMCs at the highs here. SMCs with ES. So now on the lower time frames, you want to pay attention to see if we can create some sort of lower time frame PD array, lower time frame fair value gap. Continue to be patient and just watch. So I don't want to see SMCs between ES and NQ here on these lows. So if ES takes this low, then it will kind of it will make me not want to take this entry model. So we have about 2 minutes left to the 15-minute candle closure here. So let's just watch and see. But if I were to take a short, something like, it would be something like this. Something like that. One minute, one more minute left. Oh wow, we didn't even get that retracement. Okay. Yes, we already taken out that. Okay, so we're probably going to have to look for a different entry here now. Yeah, this one is scratched. So this model is scratched. Let's just wait patiently to see what this next hourly candle would look like here, because it appears we will probably attack previous day low now. Like this is the draw. Treat this hourly fair value gap that we're creating as a breakaway gap. And let's pay attention to how this next 15-minute candle gets created. If we get a bearish 15-minute candle here, I'm going to be targeting previous day low, and yeah. Some people will probably got some shorts, took shorts up here, saw the SMT, but that's not part of the trade model here. So like I said, there's a reason for us to be trading lower here. What I mean by that is we're trading inside this TGIF zone of the monthly candle here now. So let's just watch how we do there. De la Cruz. Previous day low, like I said, could be the draw now. 9 minutes left to this candle closure here. Previous day low, I'll leave it there. If we take out previous day low without giving me an entry model, I'm gonna close the streams and turn it off for today. Alright, just continue to watch. We're trying to see if we can target, find an entry pattern to target previous day low here. That fits my model. So if we are going to close on here on this 15-minute candle right now, I would treat this 15-minute fair value gap as a breakaway gap. And I would want to see prices create a open high, retrace into some sort of lower time frame PD array, and then take out the previous day low. Because this is once previous day low gets taken, then I would just sit and watch on the sidelines here. But yeah. So let's see if we can create some sort of entry pattern. We would have alignment between the 15-minute, the 30-minute, that 1 hour as well. So yeah, let's just watch. So it could look like something like this, where we're entering off of the 5-minute. We could enter off of the 5-minute to target previous day low. Once we close here on the 15-minute candle. But we will see. We still have a lot of time. We still have 5 minutes left, so just watch. There's also this 10-minute that's about to close too. Five minutes left. Let's see what this 15-minute candle closes like in 5 minutes. See what's popping on the deep pop. Boom. boom, boom. Still have about 3 minutes left, so I'm gonna just mark out this 15-minute for VAG gap here, because the way it looks like here on the 15-minute candle right now isn't really suggesting for us to take out previous day low yet. It appears that we probably will. Well, let's just see. Dun, 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 dun. 2 minutes left. 30-minute and hourly suggests is that we're going to go lower here, but the 15-minute, I'm not too sure yet on the 15-minute, so let's just wait. One minute left. I don't think we're gonna get an entry pattern here, to be honest. There's gonna be a 1 minute for VAG gap that gets created here. So let's see if we can get an entry on the 1 minute time frame. So it looks something like this. Who stops to break even once we take out the 15-minute low. Oh, well, we didn't get that entry. So there wasn't a opportunity for us to even get into here. We just immediately displaced lower. So with that in mind,